Welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages. Big news. I don't know that I would call it exciting, but it's perceived that the outside general public like it.
Yeah.
But I think we need to bring people back down to reality a little bit on the situation.
Yeah. Let's dig into really what the announcement is.
Yes.
On its surface, it appears to be a huge help for the housing industry and buyers and qualifying for more.
Yeah.
But in reality, there doesn't seem to be a lot of people in the industry that are really jumping for joy.
Right.
So
two big things. They increased the amortization to 30 years for every first-time home buyer. It was just recently changed for new builds to do 30 years for first-time home buyers. Now it's for all first-time home buyers across the board.
Yep.
And then they also made it so that the cap for insured mortgages is now 1.5 million, or just under 1.5 million. Probably to specifically help Toronto and Vancouver areas.
Yeah.
And this got people super excited. There's lots of people, like you said, jumping for joy. But running the numbers, I don't think it's going to have the impact or carry the weight that people think.
Yeah.
So
to me, so just a little bit of backstory. All of the associations related to housing in Canada, whether it's realtors, brokers, builders and developers, they've been lobbying the government for many years to increase the cap to 1.25 million. That has been the request because housing in a lot of the areas of Canada have exceeded, like average house prices have exceeded $1 million for quite some time. So they wanted a little bit of room above $1 million to allow buyers to put less than 20% down. That number's always been 1.25 million. And the whole time, the government has pushed back and said, terrible idea, no chance, not going to do it. And then out of the blue, with very little to no advance notice, they just came out and said, we're going to go 1.5.
yeah.
So what changed their mind?
Yeah.
And I think the simple answer is votes.
Yeah.
It is a ploy by the federal government to say that they're helping first-time home buyers to afford homes. But what's the definition of afford? Afford new homes.
Yeah.
It's not that they're not qualifying for the homes they want. It's the homes they want are too expensive.
Yeah. It's a big difference.
There's a massive difference. So what this tells me is that they are protecting values of homes in Canada. They have no intention of making homes more affordable because by now opening up and introducing more potential buyers into a section of the market above $1 million, that's an inflationary policy. Now, with this, home prices have nowhere to go but up. This is not a way to bring housing costs down.
Yeah.
It's the exact opposite.
Yeah.
So what are they trying to do here? In one press release, they'll say we're gonna build more homes and we're gonna make housing more affordable for young Canadians and all that. But then they go and do a policy like this that has nothing to do with affordability.
Yeah.
This is purely allowing more Canadians to get into more debt. So if there's more buyers in a market and housing or any product, more buyers equals more demand.
Yeah.
And that increases price.
Yeah.
So they're protecting, and I do believe that to some extent they have to protect the value of homes in Canada because so many Canadians build their wealth and retirement plans around their real estate.
Yeah.
So you can't crater values. That's just the truth. So who are they servicing here? It's not young first-time home buyers, in my opinion.
No.
So So that is, I think, again, what we talked on at the start here was saying the policy comes out and on its face, maybe everybody got excited thinking that, oh, limits are up, we can, qualify for more, but you're going to pay more, and house prices have more room to escalate now.
Yeah.
So I'm not a huge fan of that, or what they're trying to do to actually help those. They say that they're trying to help.
Yeah.
It's actually, I think, going to do the opposite.
Yeah, exactly. And let's just put some numbers out there in perspective to see what it's like. So we'll start with the cap. So let's say you maximize that price, just under 1.5 million.
Yeah.
Okay. If the down payment rules stay the same, which we don't know if they will be, that minimum down payment would be about 125,000 if we're taking 5% on the first 500 and 10% on the remainder. But we don't know if that is going to be the rule.
Currently, if you want to buy a house for $1.5 million, the minimum down payment is actually closer to $450,000.
Right.
So that's a huge decrease.
Huge.
So now, that does open up more access, because not everybody's going to have $450,000.
Right.
But a lot more people are going to have access to 125.
Right.
Yeah.
And if the insurance premium stays the same based on this situation, which we don't know that it will, there might be an extra premium for going above $1 million.
Probably.
But if we use the current premium situation, it'll be an almost $55,000 premium being added to your mortgage.
Yeah.
$55,000 being added to your mortgage for this. Using a 4.39% rate, your monthly payment would be $7,109 or $7,119.
Yeah.
And you would need an annual household income over $305,000.
Mm-hmm.
What person is that helping? That is so specific and not the first-time home buyer situation.
That would put, I think that is less than 1% of the average household income.
Yeah.
Is $300,000+.
That is crazy.
So again, who are they helping?
Yeah.
They talk about trying to spread and distribute wealth and access to home ownership. Well, now if a builder feels confident that they can go out there and crank out $1.4 million houses, that's not helping housing.
No.
That's not helping people get into home ownership.
Yeah.
So it's all a bit of a farce.
Yeah.
And a 30-year amortization just in general for first-time home buyers, that will be good, and we can keep it regional, we're Alberta.
Yeah.
That will help people get into a starter home. Mm-hmm. Forget about the 1.5, like any starter home.
Yeah.
They can build a house for $600,000, $700,000. A 30-year amortization will help them, ease into home ownership with lower payments. Mm-hmm. But if they never do anything to shorten that amortization via accelerated biweekly payments, lump sums, applied to the mortgage over the course of the time they own it, or you can manually also shorten your amortization, like at your next renewal.
Right.
Instead of having 25 years left, you could say, well, we're in a different financial position now.
Yeah.
Let's shorten that to 20.
Yeah.
If you don't do any of those things, you'll pay about 26% more in interest over the span of owning that house.
Yeah.
I guess that's a lot of dough that could have been going otherwise to other retirement vehicles.
For sure.
And
I ran some numbers on that as well. If we were going down just the 30-year AM approach, 30-year amortization, I took the average household income in Canada, which according to a couple years ago was $106,000 roughly. So if we're keeping that consistent, and let's say they have $50,000 for down payment, reasonable, using and minimal debt. So we're not too worried about debt ruining things. On a 25-year amortization, they would get pre-approved for roughly about $480,000. Okay? If it was a 30-year amortization and 480 just wasn't doing it, they're trying to maximize purchase price, they could increase it to $505.
Yeah.
Okay, so $25,000 more. I don't know how much different that's going to make things, right? if the monthly payment for a 25-year AM in this situation is going to be $2,427. On a 30-year AM, it's going to be $2,356. So a little bit cheaper, but not a ton, because you're still trying to increase that purchase price as much as possible.
Yeah.
The interest overall, if everything stayed the same for the entire life of the mortgage, on a 25-year AM, $284,671 over the life. And if it was a 30-year, $374,867.
Yeah.
Because you're trying to take advantage, like 30-year AM, I'm going to increase the purchase price, but now I'm paying more interest over more amount of time.
Yeah.
Like, it's crazy. I get that if you are not finding the right home.
Yeah. There's a lot to be said. Like, I do like and I always say this, is I would rather see somebody wait to find the right house and get into a better long-term solution than buying something that they know is not going to fit their family needs over, the short term. Because buying and selling real estate is expensive, and you sell a house, you do lose a lot of equity just through realtor fees, legal, penalties.
Updating your home to be able to sell it, maybe?
Yeah, exactly. So for somebody to just get that extra little bit that actually hits a price range that suits their long-term needs, that's great. Mm-hmm. I do like that. But, and also too, like, there's so many different dynamics. When you're buying the house, there might be one of the members might be on paternity leave.
Right.
Finishing up school, knowing or feeling very comfortable knowing that their household income is going to increase over the next 3 to 5 years.
Yeah.
So getting into the right house is great. And then, but knowing that when double incomes return, or, your credentials increase through education, and there's going to be more income coming that way, get caught up on it later.
Yeah.
For sure. So that's nice to see. For us, a lot of the $1 million+ purchases around us are more on the acreage side. When you're buying a good long-term home on a little bit of land, and so that'll help acreage sales around here. They're already pretty strong, but yeah, again, that's inflationary.
Yeah.
You've now added more buyers vying for the same product. Mm-hmm. I'm not an economist, but that's pretty basic.
Yeah.
Stuff that I don't think I'm reaching on.
Yeah.
So yeah, I just wish that the government would call it what it is. Mm-hmm. And if they're trying to actually solve affordability, there's a lot of other things that they could have maybe announced with that as the tagline.
Right.
Such as reducing, permitting costs. The fees now still are hovering above 30% of every home built goes into paperwork.
Yeah.
Like, it's not nails and lumber.
Yeah.
So if they could reduce that, I mean, people would love to see the price of their house just 15% come off of just administration costs and actually go into physical construction costs.
Yeah.
So, there's a lot of things there that could have been done under the label of affordability.
Right.
This is not an affordability measure. This is, I think.
Yeah, but the things that they should have done don't sound or read as nice in a headline.
No, this is all politics.
Yeah.
And we also have a bit of a problem, and this is cultural within Canada, is that we focus on payment, not on price. Mm-hmm. Like, people are looking and saying, well, I could afford a $3,000 a month mortgage payment. I can make that work.
Right.
But they're not really fully maybe grasping the fact that they're taking on $500,000, $600,000 in debt. Mm-hmm. Is that something you
want to do?
And they're not really factoring that in, giving it as much weight as maybe we should.
Yeah.
It's all focused on payment. Cars are the same, right?
Right.
When you're looking at a car commercial, what are they talking about? Payment.
Yeah. Interest rate, 0% financing for however many months.
Yeah. So yeah, it's again, nobody was asking for this. Mm-hmm. They overshot it, and I think the main beneficiaries of this are going to be the developers, the builders, and prices will go up. Yeah. Because of this. So what I think is happening too in some of these lots that are now zoned and people have got permits in to build a $2 million house.
Mm-hmm.
What they might do now is they're going to be racing back into the permitting offices and saying, you know what, scrap that.
1.5.
We're gonna do two $1.4 million duplexes.
Yeah.
So now you're adding density into a neighborhood that maybe doesn't want it.
Right.
Or but ultimately, they're going to try and maximize that lot now. So that's going to increase housing.
Mm-hmm.
But is it the right kind of housing at the right price point?
Right. Yeah. Yeah. This wasn't the right answer.
No.
Now, there is something that I think is good that we've talked about months ago, which is on existing renewals that are uninsured, no more mortgage stress test.
Yeah.
Now, that has direct impact in a very positive way right now.
Yeah.
That's going to help a lot of people. Now you're not stuck with the current lender if they're giving you a bad deal. We can have options for you. That creates big impact.
Yeah. Yeah, that's much better. That will help a lot of families, and that was a lot of these types of measures are reviewed and brought to the government by the Competition Bureau, because they're looking and saying, well, why would a person with an insured mortgage, meaning they originally put less than 20% down, have access to the full mortgage market every renewal?
Yeah.
Why would they get that, and yet the family that put 20% down does not get the same benefits? Right. So that was great. Yeah. But again, that was a Competition Bureau analysis and audit that said we gotta level the playing field for all homeowners.
Yeah.
And so that was good. Yeah. Absolutely.
So we need more that type of thinking.
Yeah.
That's going to make an impact.
Yeah, for sure. Less PR type policies like this increase to $1.5 million. Housing accelerator funds that actually are proving to not do anything towards building a meaningful amount of houses.
Yeah.
So yeah, there's a bit of positive. Mm-hmm. Some people will greatly benefit.
Yeah.
For sure, but not enough. Not the masses, not the general population are going to see the benefits.
Yeah.
And a part of this announcement too by the government was very vague. Like, we still don't know a lot. Like, what the insurance premium calculation is going to be, what the down payment calculation is going to be. Yeah. It is so like, let's just throw this out, get blasted by critics, and then we'll build our policy around their feedback.
Right.
It just shows it's so reactionary and not well thought out, and that sucks. That's leadership. That's our leadership mentality and approach to a lot of these things. Like 6-8 months ago when they came out with this massive capital gains, was the land, basically if a parent was co-signing on Fair Land Trust, all these things that were going to completely derail a lot of accountants and how they were going to have to file and the charges that they would have to pass along to their clients who are just filing a general regular return like they've done every year. Now they got to talk about these bare land trusts and the implications of co-signing for their child. That didn't even hit reality because it was so ill thought out before the announcement that it completely got scrapped. So they keep repeating these announcements without much thought in our plan, and it's definitely damaging credibility. In what other world would a business do that? Where they can just continuously just release products and services without even having them available or ready or So anyway, it's too bad. But ultimately, will some families benefit? Yeah.
Not much though.
Not many.
Not many.
Not enough.
Yeah.
Yeah.
Not the people who have been trying for a long time to.
Yeah. So yeah. Anyway, it's changes are happening. Changes is generally good, but again, I think this is just another ploy for votes. In the upcoming election, and we'll see what actually sticks. And passes. Into policy. So.
Yeah, we'll see where it goes.
Yeah, but these are good conversations. Ultimately, as always, whenever this type of stuff is in the news, understanding how it applies to your personal situation is super important. So that's where, we want to talk to you about what this means dollars and cents wise for your particular, family.
Yeah.
And it'll be great to help more families at renewal
Yeah.
with this change to qualifying and removing the stress test. That's all really good,
Yeah.
good stuff. So, yeah.
Okay.
Cool.
Leave it there.
Yeah.
All right. Thanks for watching, listening. See you next time.